So today we are here to talk about the Toronto condo market. Now, if you're following Toronto real estate, you'll know that it's really these days a tale of two markets. Low-rise, semi-detached, and detached houses seem to be doing just fine, but the condo market, especially in this high interest rate environment, has really been struggling. Now, in the month of October, we saw something very interesting happen where there was a dramatic shift in months of inventory going from 7 months down to 5, almost on the cusp of starting to get into a balanced market, which is just totally shocking and surprising to everyone. So when looking at the Toronto real estate market right now, all eyes are focused on the condo market, trying to make sense of what the hell is actually going on. And that's what we're here to talk about. My name is Ralph Fox, and I am the broker of record and co-founder of Fox Marin. And today we have my lovely co-founder and associate, Corey, here to join us, who is a broker and co-founder at Fox Marin as well. How are you today, Corey?
I'm great, Ralph. How are you?
Oh, I'm just fine. I've thrown my back out and I'm at my stand-up desk, so things could be better. But as they say in show business, the show must go on. So today, we're here at the Toronto Real Estate Podcast to take a serious deep dive into the condo market. And Corey, you've got some awesome information to walk us through.
Amazing. Well, let's just jump right in because I know people are very curious about this segment of the market. And this is certainly the segment of the market that's getting the most media attention as well. And I know a lot of our viewership out there lives in a condo as their principal suite. They're investors with multiple condos in their portfolio or are considering buying a condo in the near future and kind of want to get a litmus test as to how do things stand in terms of inventory, pricing, days on market, and all that good stuff. So we're going to start very high level. For our viewers out there today, we are speaking to the 416 specifically, so downtown central Toronto in terms of the condo segment. And when we look at these first initial 4 or 5 slides, we're talking about all condo sizes. So today we're not breaking it down for 1 bedrooms, 1+ dens, 2 bedrooms, and so on. And we're not looking at old versus new. We're just looking at a big macro picture for condos because, as Ralph mentioned in his great intro, there certainly has been a shift in inventory. It's on the decline. So we wanted to take that closer look as to what is happening and where things may or may not be going. Without further ado, let's jump in. We're going to talk about Toronto sales activity. And when we look at these slides, we're going to look over the last 10 years. So that's going to give you a little bit of a better idea of where things stand today than where they did in 2015, which honestly feels like 20 years ago now, especially because we survived through COVID. However, this will be an interesting way for you just to take a look as to where things stand today and then where they compare to the former 9 years in the past. And we're comparing October over October, year over year. So sales, when you're looking at these charts, are transactions moving through the system. What has actually sold? So when we look at October of this year, we can see here in this chart on the right-hand side that sales are up 32% versus October of last year. So there's more sales this October than last October. And in fact, we saw over 1,100 condo sales in October just last month. So are we starting to see a trend upwards? And if you look at this chart here, you can also see that we're up versus October 2022. So is this the beginning of a new pattern where we could recover condo transactions closer to those bigger years in 2015 and 2021, whereas you can easily see as a reference or very high velocity markets for condo transactions?
I think what's interesting is if you look at 2015 to 2020, so really, or 2019, and you look at this pre-COVID condo world, you see transactions hovering at around 1,600 in October. As we moved into COVID, you saw that robust year where everyone just wanted to buy anything that they could. And we had that record crazy year in 2021. And you can ask any agent about that, and they will talk about it with awe and a little bit of remorse all at the same time. Then you see after that record year in 2021, when inflation started to kick in and interest rates took hold, we were hovering in the 800s. So to see us take this jump up to 1,100 in 1 month or in October 2024 is really, really interesting to see. And I don't think anybody really predicted it. And even talking to people in the market in October, I don't think anybody felt that there was 1,162 sales of condos in the 416. So does this make a trend? No, but is the potential of the beginnings of one as interest rates continue to slide downwards.
Exactly. All right. So moving on, we're going to look at new listings coming online. So this is all the fresh new crop of stuff that shows up on your House Sigma app and your Realtor.ca app. This is the good, juicy stuff that everyone wants to look at when they're scrolling through their phones, looking for nice opportunities, beautiful listings, gorgeous real estate photography. So again, we're comparing the last Octobers over the last decade from 2015 to last month. And one thing that I find really interesting about this is that we haven't seen an onslaught of a massive amount of condo investors or condo owners listing their property for sale. This is one thing we've talked about in our former podcast before, is that we really expected that trajectory coming into the fall. When we saw a shift in interest rates, we expected people to be like, now is the time for me to dump my condo. I'm going to be listing in the fall market, which would be that September, October, maybe early November phase. And as you can see, we actually have less listings coming online this October, only by 3.3%, which is a marginal less amount. However, we don't see that huge rise that we had anticipated in this segment for this time of year. And yes, there's a bit more listings coming out than former years, but nothing significant. And in fact, you see that highest year being that COVID year in October 2020, when everyone was making that move up the property ladder when money was cheap.
I think the other thing that's really interesting is when we did see that uptick in listings going from 2022 to 2023, resulting in condos coming to market, the price didn't really reflect that inventory coming online. A lot of these properties were tenanted, and landlords were just saying, if I can sell this at a decent price while I have tenants in there, that's fine. But if I can't, I'll just suck up the $700 or $1,000 a month or whatever it is that I'm behind, and I'll wait till I can get the price that I want. And that is why we haven't seen the dramatic decrease in sales prices as many were anticipating with the onslaught of inventory coming onto market. And if you look at 2024, and we have a slide near the end that talks about how condos are cash flowing for investors. But as the variable rates keep coming down, we're starting to see the cash flow scenario work out better and better. And I think that will impact the amount of listings coming online and may even impact an upsurge in terminations as affordability, as interest rates continue to come down. The one misnomer to keep your eye on is rents, and we'll talk about that as well.
And then just from an anecdotal perspective, I know that we have quite a few condo listings on the market. I mean, between us and the community here, it's not like we're seeing a massive surge, though, in people booking appointments to see them. There's not like multiple offers on them. Like, we're not seeing a lot of momentum around the condo market. I think this is going to be a slow burn, or this inventory is slowly getting chomped through, or investors are just deciding to take off their listing on the market and then re-rent it out, as you just disclosed. So I don't think that all of a sudden we're seeing this massive surge in condos. I think this is just going to be bit by bit as we eat through this inventory, as we move towards the spring, things are going to get more and more balanced. I wouldn't expect anything dramatic to be happening in this segment for the next little while, because we're certainly not feeling it on our side, on the condo side.
And as we talk about this, the thing to keep your eye on is going to be low-rise, first-time buyer type properties in that $1.2 to $1.3 million price range. As that gets out of reach, and we've talked about this before with the new policies of CMHC lending, moving that cap from $1 million to 1.5 for uninsured mortgages, meaning putting less than 20% down, in conjunction with the 30-year AM, there's just not a ton of inventory, especially in the 416 at that starter home price point. And I think that little market will really suck up a lot of that inventory. And as soon as that happens, just for affordability reasons, people are going to start to get pushed into the condo market. And that could be a really big factor in 2025 as things play out. So something to keep your eye on for sure.
Love that. Great advice. All right. So here we're just looking quickly at active listings. So active listings means inventory sitting on the market month over month. So basically stuff that's just not selling through. So when we look at the last 10 years, we can see some ups and downs here. So it's interesting to see the pattern of October 2015 being a higher active listing period. So product is not selling through by the end of the month as quickly. October 2020, which we all know is our COVID year. And then again here. And in fact, we are actually seeing a rise in active listings, up 21% versus last year at this time. And this is indicative of that inventory that we keep talking about. We have inventory in the market. It's not selling through. So it starts collecting. It starts adding up. So month over month, we just keep bookending more inventory, which increases the amount of months of inventory, if that makes sense. So this is also slowing down days on market, and condos start collecting dust. And then once they start collecting dust, they become less interesting because they're not new and shiny. And then that is when owners have to make that decision about what they're going to do. Is it rent it out again? Is it to sell it for a lower price or just keep it on the market as is? So we're seeing various strategies as condos have been sitting longer. But as Ralph mentioned, since last month, we've actually seen a decrease in inventory. So again, slow burn, things are slowly getting chomped through. Ralph, do you want to add anything to that?
No, I think you did a great job on that one.
Oh, great. Okay, so here are average sales. Everyone's favorite slides always comes down to price, right? And again, we're talking about all condo sizes here. Just want to be very clear about that, looking at the last decade. And so, of course, if you bought a condo in October 2015 compared to now, you're doing just fine. If you bought a condo in October 2020, you're even doing just fine. It's only been the last 3 or 4 years where we've just seen these prices hovering in the 700s. And in fact, we're a little bit down about 19,000 from October 2020 in the height of the craziness. So the fact that we're only down just less than 1% versus last year at this time on condo pricing, just still, I know we've talked about this on our former podcast last week. It just kind of does blow my mind. And, we get inundated with all this information too, the fear mongering in the media, other agents talking about it, buyers freaking out, people crying on the phone, like everyone having a bit of a condo meltdown. We also feel it too. We own multiple condos in our portfolio. So oftentimes we're concerned about it. And to see this, you're just like, okay, I can take a nice deep breath. We think things might be slowly turning around. And again, this is all very preliminary forecasting right now. We don't have a crystal ball, but these are healthy numbers to see considering everything that's been thrown at the market.
I think this is such an important slide to look at because if you bought a condo October 2019 and the day you closed, I would say to you, next year, there's going to be a global pandemic. Interest rates are then going to shoot up in 18 months or 2 years, the fastest they've ever gone up by 500 basis points. We're going to throw in a foreign buyers ban. We're going to throw in capital gains, tightening on the capital gains rules. We're going to put vacancy taxes in. We're going to put anti-home flipping taxes in. And we're going to do all of these things to the market. And what would you guess, with all of that being done to the market, the price of your condo would be? You would probably think it would be 50% less. And if we said to you, actually, your $668,000 condo is now worth $721,000, you would be like, oh my goodness.
Thank God.
Thank God. So this just is a testament to the resiliency of the condo market, given how much it's been stress tested and what it's had thrown at it. That doesn't mean that things could be different in the future or that there isn't going to be a crash in the future. We don't believe there's going to be one. But if it's gone through what it's gone through and it's still performed this way, this is just something to keep in mind versus the fear-based narrative that's always being purported out there in the mass media.
Yes, 100%. And then finally, just one more checks and balances here. And this is the inventory piece that we keep speaking to, which is very, very interesting. And again, we're comparing the last 10 years, October over October, all condo sizes here. And you can see the ups and downs of inventory. But what I want to highlight here is looking at last year at this time, we had 5.5 months of supply. And this year we have 5.1 months of supply. So we're actually down almost 8% versus last October. And we're actually down versus September, where our inventory was up in the 7-month category. So not to repeat myself, but we are like slowly seeing a decline on the listings on the market. And again, that doesn't mean that they've sold through. It could mean as well that landlords have decided to hold their property, or people have taken their condo off the market, or some people have sold their condo. So there's like different things that could be happening here. But the less inventory we have means less supply, and we have less supply. That means that we have healthier prices, generally speaking, when we look at basic economics here. And then you can see, and we've lived through these markets, how low supply has been in other conditions. So when you look at October 2019 or October 2016, like we were hovering in like 1.6 months of condo supply. Like that is nothing. And that was when we were seeing the environment of multiple offers, people outbidding one another, agents running around and listing properties and not putting $1 into their marketing strategy and taking a picture from their iPhone of an upside down toilet, posting it on House Sigma and MLS, and then the property would sell with multiple offers on it because there was that much demand because we had so little supply. So with 5 months of inventory out there, there are opportunities, buyers out there for you if you want to look at condos. I'm not trying to sell you a condo right now for everybody in the comments. If you don't want to buy a condo, you don't have to buy a condo. But if you do, or you're interested in getting in the market, this is a very healthy time to be looking for quality inventory in great locations with long-term potential upside, healthy maintenance fees, and a place that you can start climbing the property ladder in Toronto. If that is something that you want to do for yourself, this is a good time to be taking a look at what's out there. Ralph, do you want to add anything to that?
No, I don't. I think you did another stellar job. Just interesting to look at 2023 to 2024 and seeing year over year that slight drop. I think that's very promising, and we'll see if it becomes a trend. And I look forward to seeing November's data.
Me too. Me too. All right, moving on. So we're going to talk, Ralph, here about the average asking rents for all the property types. So we're kind of moving a little bit away just from condo specific, and we're bringing in all home types here to speak to rents.
But as we know, the majority of condos, I think it's estimated 60% are investor, might even be slightly higher. And the majority of condos are landlord owned, and the majority of the rentals happens in the condo market. So even though this is all types, especially in central and downtown Toronto, we're looking at a rental decrease month over month, which is really significant, of 1.2%. And we have a very robust rental division because we work with a lot of investors at Fox Marin. We probably do 150 plus leases a year. And we're definitely seeing a slowdown on the rental side. But to start to see for the first time in a very, very, very long time since COVID, really, rents start to come down is really interesting. And it does make sense as the economy is starting to slow down, as people are choosing to live in their parents' basements for another couple years. People are choosing to stay at home, or anyone who's gotten a COVID special is staying put. So there's not a ton of movement right now in the rental market, as there is a lot of economic uncertainty. And so I think we've hit a bit of a ceiling with rental prices. I mean, you need an income of $75,000 to afford a one bedroom in downtown Toronto, which to me is just mind-blowing. So there's only so high of a ceiling we can push with rents based on incomes. Very different than on the resale buying market. So it's just important to note, because yes, while interest rates and costs to carry are coming down, there seems to be now a bit of a downward pressure on rents, which is really, really interesting to watch and see how that plays out, because that in turn could affect inventory and maybe cause more supply to come back on the market, even while interest rates are moving down. So keeping an eye on rental prices is really important. If we go to the next slide, we'll start to see, if you look at condo and townhouse rental listings in Toronto, you'll start to see a dramatic increase in rental units coming to market. We have seen a strong demand side, but there's a lot of new listings coming up 46% year over year. So that's really significant. Part of that is also because we have a lot of condos still coming online over the next year and a half, with new builds that were purchased 3, 4, 5 years ago coming online. I believe there's something like 70,000 in the pipeline. Now, those all won't come out in 1 year, but we will see new pressure on inventory side of the rental market, as well as you'll see pressure on rents starting to be capped just based on affordability and economic uncertainty here in Canada. And that will continue to cause pressure on pricing. So keep your eye on the rental market if you want to start to understand how that could affect the condo market and future levels of supply. The next slide is interesting. So this is really helpful to look at the cash flow adjusted for principal payment. So you're starting to see we hit the bottom at the beginning of 2024 of affordability. And if you look at this orange line here, it includes principal repayment. At the bottom, we're probably around $700 below most the average investor or landlord was on their payments of cash flow. And now we're getting closer to that break-even line. So as rents come down in tandem with interest rates, it might be interesting to see how this plays out. Again, shout out to Edge Analytics for this data, because I think it's really helpful when you're looking at the condo market or the rental market, how that could affect inventory coming online on the resale market in turn. So there's definitely different forces push-pulling right now. But this next slide, and this is something that we've really been talking about, is the future pipeline of condos. Because here you look at condo sales and they're literally, it's like a ball just falling off a table, off a new pre-construction sales.
Sorry, I just wanted you to explain what new pre-construction
Yeah,
sales.
pre-construction sales. So it's when you walk into a showroom and you put a deposit down and you sign a contract for something that hasn't been built, that will be built in 3-4 years' time. So September new home sale fell by 69% in September comparative to the year before. So that's really important to understand, because what that means is in the future, there's going to be very little supply coming online. If you look at the next slide on this, or if you look at the next chart, you'll see new home starts versus condo starts. And you can see that the new condo sales are just basically falling off a table, a ball falling off a table. And then you look at the starts, and that lags about 18 months. So if you look at where the new condo sales are, and how they've fallen, and you realize that there's a lag between sales and starts, this will give you an indication where new condo starts are going to end up 18 months from now. So it's projected that and this is conservatively, that by 2028, we could have less than 5,000 condos coming online. For a city our size, it's unbelievable. And then this next slide, it's just starting to show you dwellings under construction on the condo side, how that's been trending up, and that has been putting pressure on the condo market, because we've had a lot of new inventory coming online. There's still a bit more inventory to come, but that is going to really, really dramatically fall, again, bringing us at 2028 and beyond sub 5,000 condos. It's going to be a very different world. And that's why we are telling all of our condo owners, our investors, our landlords, if you own a condo, the best thing you can do, even if you're negative on cash flow, is just to hang on, because there is a massive, massive supply shock on its way. So the question is, it's just getting from 2024 or the end of 2024, we're basically at 2025 to 2028. So there's a few years of choppiness. There's going to be more inventory. There's going to be pressure on listings, but I think you're also going to see a pressure on affordability, as a lot of homeowners, home buyers are just going to be forcibly pushed into the condo market. My projection is the condo market will chop around for maybe the next year, but the good condos are still going to continually sell, and there'll always be demand for good layouts, well-priced properties that are professionally staged and marketed. So I think that's where we're at. We're definitely not out of the woods, but a lot of the resale information is showing that we could start to see a fallback in inventory sitting on the market, and we could start to see an increase in demand keeping in mind that the rental market may put some pressures on supply with also new supply coming online. So I think it's going to be a choppy, flatline type of situation for the next year, maybe even 2 years with some ups and downs. But there is light at the end of the tunnel. If you own a condo, just hang on.
Well, my major takeaway is that I have another 3 years of sleepless nights before I feel really good about this. And up until then, it will just be the up and down, emotional highs and lows, right?
Right. I have a feeling it'll be a lot less than 3 years.
Okay. Well, that's good. And in the interim, if anyone has any questions or wants any specific data pulled about your area or about a condo segment or something that's condo related, feel free anytime to pop your questions and your comments in the section below. And as Ralph and I always say, we really welcome your opinions. We're totally okay if you do not agree with us here. I think we are just giving you a bunch of data to help formulate and shape a concept. And of course, as I mentioned earlier, we don't have a crystal ball, but it is just feeling like maybe the pattern has started to shift. And gosh, we could be totally wrong with that too. So please feel free to share your thoughts. We love hearing from you in this Fox Marin community. Ralph, is there anything you want to say before we head out?
Yeah, please be sure to hit that like or subscribe button. And going back to what Corey was saying, if you have any comments, we'd absolutely love to hear from you. I'm Ralph Fox. This is Corey Marin, and thank you so much for tuning into the Toronto Real Estate Podcast.
Thanks, everyone. Have a good one.